Welcome to the very first long form video here on the Market Mentor Ventures channel. It's a long time coming, but we keep it simple here. No jargon, no judgment, just real talk. Before we jump into it, if you're new here, my name is Dahuda, aka the Market Mentor. I'm a registered nurse, investor, educator, and the president of the EYLU Investors Group. I started Market Mentor Ventures to help people feel confident in investing without all the noise. Whether you're starting with $10 or scaling our portfolio, the goal here is just to help make investing simple, relatable, and doable without the complex jargon and judgment. So if you ever felt like investing is difficult, overwhelming, or like you'll never be able to invest, let's relax, pull back the layers. You're in the right place. All right. So at least today, what we're going to get into is what the market's showing today. If you've been following me on Instagram or TikTok, catching my market recap snippets with the EYLU family, you already know how I've been hawking VRT. So we're going to dive into that. Why are the markets pulling back? What was that tweet that Sam Altman posted? What does it even mean? And what this opportunity could be for long-term investors, right? We'll look at some key levels that I've discussed in the past, some potential setups, and how I personally approach moments like this with clarity rather than emotion. Before we get into it though, make sure you hit that subscribe button. Grab my free investing cheat sheet. The link will be in the description so you can follow along and build with me each week. All right, so let's tap in. Sam Altman made those headlines recently saying the GPUs are melting. Let's actually pull that up real quick. So he says, it's super fun seeing people love images in chat GPT, but our GPUs are melting. We're going to temporarily introduce some new rate limits while we work on making it more efficient. Hopefully it won't be long. That's quite interesting. Next thing that I'm thinking about is, okay, that's a pretty loud statement, and it also highlights how heavy the AI workload demand is on global infrastructure. So everybody's been focusing on NVIDIA and all those other chip plays, but there's another name that's just as important in that conversation, and that is Vertiv. They may not be building the chips per se, but they're building the systems that keep these data centers running, which is being that cooling agent for those GPUs that are, as Sam Altman says, are melting. So even with that being said, there seems to be some conflicting headlines, which as a new investor may have you like stuck as like, wait, well, do I invest now or what do I do? There are two different conflicting views. Let's look into it here. So in this article, we'll start at the top first. Big and large cap stocks have spearheaded the rally in the past 2 years, but Wall Street's expectations have gotten ahead of many of their fundamentals. Nasdaq briefly entered correction territory as the stock market cooled over the past week due to tariff fears and a perceived slowdown in the growth of AI, right? And that's obviously going to spill into the data centers. Wall Street's now reassessing those growth premiums that they're paying for many of those large cap stocks, also keeping in mind of the event that happened with the DeepSeek, that open source model that essentially was found to be just as or maybe even better than OpenAI's ChatGPT. That was very interesting. Let me scroll down. So the stock is down significantly, Vertiv, so far in 2025. It's down over 20%. 20% off its high is typically what I look for. But this is not even saying it's 20% off its high. It's just 20% down, period. They recently issued softer than expected first quarter guidance. Also kind of goes in correlation with the tariff announcements, which will lessen sales for a lot of companies. And then also, interestingly enough, Microsoft recently canceled some of its data center contracts, and the broader AI market pullback has been dragged down. Even though that is evident, this part stuck out to me as well. The consensus price target of 137.14 implies a 56.23% upside. That's big. That's really big. Because although there's these conflicting views, we can check fundamentals, right? With this AI revolution that we're upon right now, data centers are going to be needed regardless. There's going to be more AI, more GPUs, which means that you're going to need a cooling agent so that these technologies don't overheat. But before we even get into that, let's actually pull up the chart, right? Let me just share my screen. So check this. This is Vertiv's chart on Thinkorswim. For me personally, I like to use Thinkorswim for my long-term investing. I also use TradingView. I use it for both long-term investing and more so specifically trading and just marking off certain key levels. So here with Vertiv, back in November and December, we were praying for the pullback, right? This was this breakout level right here because it was hitting resistance at this area of 98.35 or so. And then we finally broke through in October and took off since then. I said in January that we may just be retesting that old resistance because typically that's how stocks move. It'll hit a point of resistance, come back, buyers will show up and find strength. That area then becomes support. It was that was the case here in January, but February didn't hold up and we continued to drop down. It has now passed a significant key level of 50% on that retracement mark, right? That is a over 50% discount, as we saw in that Yahoo document article, 56 point something percent upside. As a long-term investor, if I know a company is needed and I see that I have a 50% upside, I like my chances. Full disclosure, this is not investing advice. This is all for educational purposes, but these are the moments where as an investor you look for. You never want to buy at the high up here because you're not likely to get the biggest bang for your buck, and your return on investment is not going to be obviously not as high. You always want to look for a sale. It's like going shopping. When you go shopping, you're not trying to buy market price. You're looking for a discount somewhere. And this is a major discount, I feel, in my opinion, in the AI space. While everybody's talking about the other chips like the NVIDIAs, AMDs, I mean, Vertiv is going to be there regardless of the two because it's needed as a part of the AI infrastructure. So let's take a look at what I'm looking at right now, right? Now that we understand some of the fundamentals, we see the catalyst behind the company. Let's look at TradingView here. Let's pull this up. VRT. All right, there we go. All right, let's actually scrap some of these drawings because that's old. Let's go back to the monthly here. So here on the monthly, this is where we thought we were going to just retest, and this is February pullback, and we kept going down. We see all this wick here. There is a lot of buyers shown up in this area. It looks like the 70. Let me use this area here. And on the monthly, we have been respecting the 10 EMA up until February. As far as the 20 EMA, we've been respecting it since 2023, May of 2023. We have to, for Vertiv, we need to finish at least above that 78.90 level because I had that marked off as like a monthly support area because we see here, it's gotten there and then always closed above it. So next week, if we can close above 78.90, I think we are still bullish on Vertiv. See what it looks like on the weekly chart. Yeah, that was a nasty close last week. And here shows some bearish divergence. And bearish divergence just shows the momentum. It's an indicator that shows a momentum change. So this is your 10 EMA crossing over the 20. That indicates further selling. And as you see, that was printed here and we continue to drop. So that's something to look at. It has the same opposite momentum here, and we see once that was triggered, it continued to go. It doesn't always work like that, and you have to be mindful of the time frame that you're looking at it on as well, because this is a weekly time frame that I'm looking at it. Damn, 56. Yeah, if March can't close up above 78.90, I mean, the next EMA is not off the charts, you know. Back here was support. This area was support 270s. And this goes as low as 61.8. Yeah, it'd be interesting to see. I mean, with that selling pressure and tariff talk is scaring everybody. I understand that. I just have an alert set down here just in case with how things have been going. But if March can close above that 78.90 mark, um, I don't I don't think we get down to 56. Let's look at the 4-hour chart and see where we're at. Yeah, it was still seller heavy even at the end of the last week. We'll have to see how this upcoming week goes. I mean, we're already beyond the 400 EMA on the daily, and typically that's a nice level to possibly buy shares, or if you're thinking about entering on a trade. For most quality companies, that level is pretty strong, a pretty strong support level. That's what I'm seeing right now for Vertiv. Yeah, so with that said, like when I hear GPUs are melting, I don't just hear like a hype type situation. I also hear a reminder. And it's a reminder that investors shouldn't chase the noise. We watch the levels, we track value, and we plan with purpose. You don't want to get tied up in all the noise, because that's when you could panic sell, you could panic buy, you can buy the dip and not realizing it's about to dip even further. So that's happened many times. So like I said before, if you want to learn how I break down certain companies every week, you can grab my free investing cheat sheet. The link will be in the description, like I said, and hit subscribe so you never miss a market update. Thank you for joining me, and I'll see you soon.